Insurance Law, Unit 4. So it talks about fire insurance. The entire Unit 4 is about fire insurance. So meaning of fire. What do you mean by fire? Fire means actual ignition under accidental circumstances and not merely generation of heat. So there should be actual flames. So if the damage is caused by actual flames, then it means fire. It is fire. There should not be just a generation of heat. There should be actual flames, ignition. Loss by fire. So what do you mean by loss by fire? Damage by smoke and scorching caused by fire. So if the damage is caused by the smoke of the fire, then it is also a loss by fire. Property blown to prevent fire spreading. So prevent the chain of fire, to prevent the spreading of the fire. If we destroy certain property, then it also lost by fire. The next is damage by water while extinguishing fire. So while extinguishing fire by water, if any property gets damaged, then it is also lost by fire. Damage by fire brigade during their execution of duty. So if fire brigades, while exercising their duty, if they destroy a property during their duty for extinguishing the flames, if they destroy a property, then it is also lost by fire. Property removed from burning building by rain, theft or damage during removal. So a building has caught fire, and if during the burning of the building, if certain property in the building is removed by rain or due to theft, or if someone is trying to remove the property from a building and it gets damaged, then it is also lost by fire. Then the next is damage by fall of walls in a burning building. So in a burning building, if the wall of the building falls and damages certain property, then that property is damaged by loss by fire. So it is a 10 marks question. Define fire and loss by fire. The next important concept is fire insurance. So definition of fire insurance. What do you mean by fire insurance? According to Hasbury, fire insurance is a contract of insurance where the insurer agrees for certain consideration to indemnify the assured up to certain extent, subject to certain terms and conditions, against fire loss, property of assured to a specified period. So it is nothing but a contract for fire insurance, nothing but where one person promises the other person to indemnify him against the losses caused by fire. So the subject matter here is fire, loss by fire. In the case Castellan vs. Patton, fire insurance was defined as it is a contract where one person undertakes upon agreed consideration to indemnify losses by fire up to agreed amount. So it is nothing but the insurance for where the subject matter is loss by fire. Insurable interest. So what are the insurable interest in a fire insurance? Physical object capable to be destroyed by fire. So any physical object which we can destroy by fire, which we can burn, is an insurable interest. Object is a subject matter, and that object which is capable of being destroyed by fire should be the subject matter of the fire insurance. And the insured should be recognized by law to take benefit from safety of such a subject matter. So the insured should be recognized by law to take fire insurance. So who are the persons who can take fire insurance, or the persons who have insurable interest in fire insurance? Owner of the property. So owner of the property can take fire insurance on his property. Then an agent in property of his principal. So an agent who is working for his principal to look over the property, he can take fire insurance on behalf of the principal for that property. Next, partner equitable interest in firm's property. So in partnership, a partner can take an equitable interest of fire insurance in the firm's property. A creditor, property in lien for debt. So a creditor who has taken a property in lien for his debt, he can insure it for fire insurance. The next is insurer in reinsurance. So even the insurance company can take fire insurance by reinsurance. A mortgager can take fire insurance on the mortgaged property. A bailee can take fire insurance on the bailed property. And a trustee can take fire insurance on the trusteeship property. So these are the persons who can take fire insurance. The next is fire insurance policy. So what do you mean by fire insurance policy? Meaning, fire insurance policy is a standard insurance policy designed to provide basic minimum cover with low premium to large number of insureds. So it is a standard policy where everything is determined, the terms of condition, everything is standard, and it is done so that a large number of insured persons should take insurance in that, and they can get lower premiums if a standard insurance is maintained. So this is fire insurance policy. It's a standard insurance policy. So what are the contents in a fire insurance policy? There are recitals, the headings, then there is name of insured, then there is a description of a subject matter, on what subject matter we are taking insurance. Here it is fire. The next is amount of insurance, what will be the claim, so that amount of insurance, and contract of insurance to indemnify insured. Then we have terms and conditions of the policy. Then we have perils insured against, what are the dangers, perils the insured is taking insurance against, that it contains. Then we have duration of policy, to what time the policy will be valid. Then the extent of insurer's liability. Then we have amount of premium, how much of premium the insured will have to pay, and to what time he will have to pay. Then the signature of insurers. It is the content of fire insurance policy. The next is scope of fire insurance policy. So the scope of fire insurance policy is mentioned under Section 2 of All India Fire Tariff. So it contains the scope of fire insurance policy. So what are the scope of fire insurance policy? The fire, if the damage is caused by fire, then it falls under the fire insurance scope of fire insurance policy. The insurer will be liable to pay if the damage is caused by fire. The next is lightning. If the damage is caused by the strike of lightning, then it comes under fire insurance. Then we have explosion. If explosion happens, then it also comes under the fire insurance. Then we have aircraft damage. A part of an aircraft or the entire aircraft falls on a building or any property and the property gets damaged, then that also comes under fire insurance policy. Then we have riot, strikes and malicious damage. So if the property is destroyed by riots, strikes and malicious damage, then it falls under fire insurance policy. Then we have storms, cyclones, typhoon, tempest, hurricane, tornado, flood and inundation except earthquake. So except earthquake, all the natural calamities like storm, cyclone, typhoons, floods, etc. comes under fire insurance policy. The next is impact damage by rail or road vehicle or animal. So if the property is damaged by the impact of rail or by the impact of road vehicle or by the impact of animal, then it comes under fire insurance policy. Then we have subsidence and a landslide including rock slide. Rock slides also fall under fire insurance policy. Then we have bursting or overflowing of water tanks and pipes. So if the damage to a property is caused due to the bursting of water tanks or water pipes, then it falls under fire insurance policy. Then we have missile testing operations and leakage from automatic sprinkler installations and bushfire except forest fire. So if the damage to property is caused by bushfire, then it falls under fire insurance policy except forest fire. The next important concept is rights of insurer after fire. So what are the rights of insurer when after the fire has taken place? So the insurer gets the right to enter and take possession of building or premises where the loss has occurred. So the insurer who is paying the claim to the insured for the fire, after paying the claim, he can take the entire possession of the burnt property to himself. And he can take possession of any property in building during damage So not just the building, the any property inside that premises that was there during the fire, the insurer can take possession of that property. Then remove, sort, arrange or salvage property. So after taking possession of the property, he can salvage that property. Then sell or dispose the damaged property. He can even sell or dispose that damaged property. These are the insurer's right, and these rights are given to him after he pays the claim to the insured. The next is duties of insured after fire. So what are the duties of the insured, the one who has taken the policy? His duty is to send a notice of loss or damage to insurer. So he should notify send a notice to insurer that his property has been damaged by fire, and he has to claim the policy. And within 15 days, submit to insurer list of items lost by or damaged. So within 15 days of the fire, he has to send to the insurer a list of all the property that he has damaged by the fire. Then particulars of other insurances. So if he has taken insurance from other companies, then he will have to specify that to the insurer. Then insurer is not liable to any loss after 12 months of damage. So the fire has taken place and 12 months have passed, but the insured has not claimed anything from insurer. Then after 12 months, the insurer is not liable unless it is running in an arbitral tribunal or court, if the case is pending. And if the insurer refuses to pay the policy, to pay the claim, then the insured should file a suit within 12 months, or else his claim will be lost. So fire has taken place, the insured goes to insurer and tells him to pay the claim, but the insurer refuses. Then the insured will have to file a case in the court within 12 months. If he does not file any suit within 12 months, then the insurer will be free. He will not have to pay any claim. The next is crop insurance. Definition. Crop insurance is nothing but loss of production due to climate, drought, flood and cyclone. So loss of the crops due to climate conditions like drought, flood and cyclone, and then loss of crops due to pest infections, plant disease and riots and strikes. If the crops get damaged, if the production of the farmer gets damaged by these climate, pest infection, plant disease and riots and strike, then it is called crop insurance. If the policy is taken for these damages, it is called crop insurance. History and development of crop insurance in India. So the first is Comprehensive Crop Insurance Scheme was developed, CCIS. So it is a crop damage due to climate conditions. So for the crop damage due to climate conditions, this scheme was introduced in the year Kharif 1985 and it was valid till the year 1999. So this was the first scheme, Comprehensive Crop Insurance Scheme, CCIS. The next crop scheme in India was National Agricultural Insurance Scheme, NAIS. So this was implemented to enlarge coverage to farmers, loanee and non-loanee. So it was to enlarge the previous scheme. This scheme was introduced. It was valid from the year 1999 to 2000 to 2015 to 2016. So in the year 2015 to 2016, between that period, it was withdrawn. The next is Pilot Modified National Agricultural Insurance Scheme, MNAIS. So this scheme was introduced to improve further and make scheme easier and farmer friendly. So to improve the previous scheme further and to make the scheme easier for the farmers to understand and to make this scheme farmer friendly, this scheme was introduced. A joint group constituted by government and they recommended this scheme. Started from year 2010 to 2011, launched as a full-fledged component of NCIP on 2013 to 2014 year. The next is Plot Weather Based Crop Insurance Scheme, WBCIS. So this scheme was introduced to bring for more farmers in crop insurance. So they wanted more farmers to come and take crop insurance. So this scheme was introduced. It was effect from 2007. In the year 2007 it was started. It provides cover against adverse weather, heavy rainfall, humidity, etc. It used to provide. The next scheme was Pilot Coconut Palm Insurance Scheme, CPIS, was introduced in India. In the year 2009 to 2010, this scheme was introduced. The insurance was taken here for coconuts only. Coconut growing areas of Andhra Pradesh, Goa, Karnataka, Kerala, it was implemented. The next scheme was National Crop Insurance Program, NCIP. So this was an improvement for the previous scheme. So the previous schemes of MNAIS, WBCIS and CPIS, which we saw, were improved. By these three were merged and NCIP was introduced. So it was started in the year 2013 to 2014. And the latest insurance on crop is a new crop insurance schemes. Pradhan Mantri Bima Yojana, PMFBY, is the latest scheme on crop insurance. So MNAIS and NAIS, now they have replaced with the PMFBY scheme and started from the year 2016. So these are the history and development of crop insurance. The next is problems associated with crop insurance in India. So what are the problems that India is facing in implementing a crop insurance? First is a lack of transparency. So the crop insurance lacks transparency. The farmers are unable to understand the terms and conditions or how the crop insurance actually works. It lacks transparency. Then is high premium. The crop insurance has very high premium, which makes the insurance not affordable to farmers. Then we have delay in conducting crop cutting experiments. So these crop cutting experiments, they are done after damage is caused to the crop. They send a report to the government of the damage that have caused. So in sending the report, they are making delay. The next is non-payment or delayed payment of claims to farmers. So even after the crops have been destroyed, the insurance policy they are claiming, they are not getting claims early. There is a delay. The next is the unsuccessful implementation of PMFBY in the first year. So this is a PMFBY scheme, Pradhan Mantri Bima Yojana scheme, PMFBY. In the first year, it was very unsuccessful in implementation. And during this first year, there was very high premium for this PMFBY premium rates. Then delay in submission of crop damaged crop data. So even after the damage was done to the crop, the insurance, the data that was sent to the government about the damage of the crops was delayed. The next is no trust in data as it is not video recorded. So even if this data about the damaged crop data is sent to the government, the farmers don't trust it because it is not a video recorded. The next concept is micro insurance. It has been asked as a short note once. So micro insurance is nothing but it is a kind of life insurance for small term. For very small term, life insurance is taken in micro insurance. The duration is of 5 years and there are very low premium rates. The premium starts with ₹50 per year. That much low premium is there and it is there for 5 years duration, the policy. And the claim, the insured will get claim when he dies within the policy. So this concludes 4th unit. Thanks for watching.